Today, we are going to get a little bit into the different types of funds. And I just wanted to review some past deals just to kind of run through a couple perfect loan proposals and deal templates just to see if anybody has any questions on evaluating deals. And I also wanted to kind of just ask everyone's opinion on here. If you could, in the chat box, if you want to share your answer with everybody, just make sure you click where it says to panelists and attendees. If it says just panelists, then only I will be able to see it. So it's up to you how you want to respond on there. But if you could real fast, if you're a borrower, could you put a B in the comment box? If you're a lender, can you put an L in the comment box? So B for borrower, L for lender. So basically, if you're in the private money club, or if you're on here and you're looking to borrow funds, so you have deals available, you have flips available, or you're looking for partnerships, you would be a B. If you're in the private money club, or you're here right now today to learn more about lending opportunities and places that you can lend your money to grow your money, to get your money out there working for you, put an L. I just want to see what we have here. So LB, LB, LLB, LLLB, LLL, L. Okay. So it's probably about 60%, 65% lenders, 35% borrowers. Okay. Well, thank you for that. And let me ask this. Is anybody on here actively wholesaling? Is anybody only wholesaling? Are there any wholesalers here? If so, put a W. W for wholesaling. And then I'm also looking for, is there anybody on here that's looking to actually buy rental properties, long-term holds? So you're looking to build your rental portfolio, add rental properties into your portfolio. Is there anybody like that? Put an R. If you're looking for actual rentals, not lending on deals, but actual rental properties you want to buy and build your portfolio, put an R. Okay, so we got a couple wholesalers. We got a few people looking to actively buy rentals. Okay. All right. 3 people actively looking to buy rentals. All right. All right. Perfect. All right. And thank you for participating in that. It just gives us a good idea of, what can we provide more training on? What can we provide more in the private money club? We are actually behind the scenes a little bit. We've been on the phone since 9 a.m. Eastern time this morning on a Zoom with basically our entire money school team. And we're going to be doing this all week this week. And we're just going in and kind of redoing a lot of our internal and back end components of money school and money multiplier and private money club and everything. So the private money club is coming along nicely. Just so everybody knows, it's going to be privatemoneyclub.com. You're going to have your own login. You go in, and that's where everything's going to be in one home base. So you're not going to be going on Teachable. You're not going to be going on Slack and all that stuff. It's all going to be within the private money club, building out your perfect loan proposal and your deal template, your lender template. It's all going to be a step-by-step form that's filled out, templated. So everything's going to be very, very simple. So we're going through a lot of the details on that this week and finishing all that up so the developers can get that up and going. So we should have that here very, very soon. Catherine said maybe looking for rentals, the Duck V thing. Yeah, I can definitely talk a little bit about that too, what Duck V is doing. Angie's eventually looking to add rental to her portfolio. All right, awesome. So we got a lot going on internally this week. So if you're looking to, if you need any help or we have calls scheduled, they're a little bit more far and few between. So if you need anything, just shoot me an email and we can kind of get stuff done outside of the calendar this week. But it's all stuff that hopefully you guys look forward to into the future. So what I wanted to do today was just go through some of the different types of investments one more time, just to make sure everybody understands what's in the private money club. I know we had probably 65% of people are lenders on here, or looking to build their rental portfolios. So let me kind of show you some of those different options, and I want to run through a couple deal templates just to give everybody an idea of when they're looking through these, of pros and cons. And if anybody has any questions, put them either in the Q&A box or over in the comment box, and I'll be sure to answer those as we go. Because again, these Money Club Mondays are for you all. So I want to answer any questions you have, any, I don't know, problems or issues you're running into in the private money club, anything that you would like us to do more of. Let me know, and we're going to build that out. So I give you one example. I was talking to one of our Money Club members last week, and they told me they would love to see a entire process of finding a private lending opportunity, evaluating it, and then using their new money multiplier, infinite banking, privatized bank policy to lend to their LLC that's newly created, thanks to the money school. So from their new money multiplier policy, loan, taking advantage of taxes and everything, a loan into the LLC lending out to a private money club lending opportunity, and then how all that recycles back in, how to take the most advantage of taxes, and how to recapture and recycle all that back into the policy, and then grow a profit and create an income for yourself doing that process over and over again. Would anybody like to see an in-detail video training on exactly how to do that? Just put an I in the comment box if you'd like to do that, because Chris and I are in the middle of creating that right now. So we'll have that. All right, awesome. So it looks like there's a good demand there for people that would like to have that training. So what we're going to do more of is real world, like exactly what we are doing, what our members are doing, taking all of the pieces of Money School and Money Multiplier and putting them together so you can just go do that exact same thing. So I'm glad to see that people are interested in that. So we will definitely get that done here in the next couple of weeks for you. So anybody that's in MSTV or the Private Money Club, we do have a Thursday evening 2-hour group coaching call this week. So make sure you're registered for that. You should get the emails. We'll post it in the private Facebook, page, and you should get emails or reminders about that. And then also the link to register is within Teachable in MSTV and the Private Money Club. So make sure you register and hop on Thursday evening. It's from 6 to 8 p.m. Eastern time. And we're going to have Jeff Wickersham, who wrote a book about waking up in the morning and getting things done in a morning routine, and just a really cool overall, really motivational guy. So he's going to spend about 30 to 45 minutes with us. And then Chris and I are going to go real in depth with some different private lending and some different things that are going on the market right now. So it's going to be a really good group coaching call. If you've never been on one before, it's not like this. It's where every single one of us has our own little video on the Zoom. So everybody has a video, everybody has their microphone turned on, and we basically just have an open discussion. So it's a group coaching, and they're really, really good. If you've ever been on them before, they're a lot of fun. So make sure you hop on. It's this Thursday at 6 to 8 p.m. Eastern. All right, so one question real fast. If I have an active 401k that is managed by my company, how can I preserve what I have in my 401k before the market goes down? Yeah, that's a great question. We talk a lot about that. One thing you can do is look at taking a loan. So you can typically take $50,000 or up to 50% or up to $50,000 out of your 401k in the form of a loan. The nice part about that is the interest that you pay on that loan, the interest goes back into your 401k. So you're essentially paying yourself interest on the money. But it gets 50,000 out that you can initially take and invest somewhere. So, outside of the stock market. Otherwise, depending on some companies, if you're over 50 years old or if you're over 60 years old, sometimes they'll let you start to do a direct transfer out of the 401k where there's no tax consequences or any penalty that's involved. In that case, if they allow that, then I would suggest maybe moving it to a self-directed IRA where you can control the money and follow some of the strategies that we teach you, like lending in real estate, like private money lending and through the Private Money Club. So if you're able to do that, but you're going to have to call your plan administrator or the HR department and ask them, hey, can I take a 401k loan and how much can I take it for? Or B, can I transfer money out of my 401k right now? Other than that, you're just going to look at, what is the 401k offer? So what is the plan administrator? What is the company offer to you through your 401k? And they're all a little bit different, but most of them should have a very, very conservative option. So that could be an all cash account where it's basically all cash. It could be something that's very heavy on US treasuries and bonds and very conservative investments. Getting yourselves out of the equity markets is important. Anything that might have like precious metals like gold and stuff in it might be good right now. But anything conservative, if you can get your money either in cash or conservative, if you're not able to transfer out of it or take that loan, that'd be your best bet right now. If you feel like the market is going to correct, which I absolutely agree that it will. And then the question comes, if the market's going to correct crash or come way down, when is that going to happen? So then the conversation really becomes, okay, well, what is my upside potential versus the downside loss? So if I feel like, we're breaking all-time highs right now in the S&P 500, it seems like every week we're breaking the record again. How much longer that can that happen before we do start seeing that correction? So is it worth risking keeping it in there, trying to take advantage of these small incremental increases, or is it going to drop before we're able to get the money out? And if you feel like it's going to drop and you don't want to play that timing game, then absolutely it'd be a great time to look at either getting in very conservative type cash type positions or getting the money out of there. And then, it could make sense depending on your situation if you pull the money out completely. And if you have an old 401k, if you're not actively at that company anymore, if you have old 401ks or old retirement accounts, those are like the lowest hanging fruit that you could transfer over to a self-directed, for instance, take control of that money and start directing where those investments are going. But that's money right now that's just sitting, that's just being wasted. So that's the first place to definitely check. Okay. Lynette said, we have a stock account that is an IRA. So I sold my Apple stock today and it just went to the cash account attached to that account. So I assume no tax liability since it didn't leave the account. Yeah. So you're going to look at realized gains in your brokerage account, Lynette. It'll probably, if you made money on that, it'll go into like your realized gains for the year. And that probably will, I'm assuming that, oh, it's in an IRA. Yeah, so if it's in an IRA, then that's all money protected. Sorry, I was thinking a non-qualified brokerage account. But if it's an IRA, then yeah, that money within the IRA, whatever's going on within that IRA, that's all within the IRA. So that's all either tax deferred. If you remember last week, we talked about different types of IRAs and, traditional versus Roth. So if it's a traditional IRA, that money's just going to sit in that IRA, that retirement account, and it's going to be deferred tax until you start to withdraw the money from the IRA whenever that might occur. If it's a Roth, then it's going to sit in there and be tax-free growth. So yeah, you'll have no tax liability right now, Lynette, until you actually start taking withdrawals or distributions from that retirement account. Okay, yeah, and if you keep these questions coming, guys, because again, this is all about you. So if you have questions, I want to be able to get to those, while we're going, and I start getting into some of this different content. So I'm under 50. So if it can't go anywhere, appreciate it. Yeah. So if it can't go anywhere, just look for the cash or very conservative, and definitely look at the loan. That'd be a great option. We talk about that all the time, using employer-sponsored plans to take the loan and invest them and grow. You keep the spread. It's a very good strategy. Okay. So three main types of investments that are within the private money club. So if you're one of those lenders or rental buyers. So if you're looking for rentals or if you're looking to lend, so an L or an R from the beginning of this right now, what there's different options for you within the private money club. So the primary ones, there's going to be three main types. Two of them are going to be for lenders. One of them is going to be for people looking to add to their rental portfolio. So two of the most solid investments you can make right now if you're a lender. So if you're just looking to passively lend your money out, this can come from an IBC policy. The money can come from an IRA or a Roth IRA or a solo K. The money can come from a savings account or just your checking account or a business account. Doesn't matter where the money comes from, but you're looking to lend it, meaning you're looking to get the money out there working for you. So that money's growing and gaining and earning you money while you're doing something else. So it's very passive. You're not putting a lot of time into it. So the types of investments, we have a couple that I wanted to hit on, and then we're going to get into the individual types of investments that are out there, like the flips that people are looking for lending on. So the first one you hear us talk a lot about is the Safari Fund. So if any of you follow Chris Naugle on Facebook or Instagram or on social media, where was Chris Naugle this weekend? Did anybody see where Chris Naugle was this weekend? Come on. I know some of you guys follow Chris on social media. Yeah, absolutely. So he was with Chris Ruud. So he was at Chris Ruud's mastermind event. Chris Ruud does a mastermind event at his house once every 3 to 4 months. It's an excellent event if you are ever looking to really just learn all you can about buying mobile home parks right now is what Chris's masterminds are all about. This would be an excellent, excellent event to attend. But Chris Naugle was with Chris Root all weekend at his mobile home park buying mastermind event. So one of the reasons that Chris was there is Chris Root, about 4.5 years ago, Chris Root started looking at mobile home parks and affordable housing. And one of the reasons he started looking at that is because single family homes have become tougher and tougher to find. And we could talk about that more in a second. There's been a lot in the news lately about BlackRock and a lot of and some of these bigger hedge funds out there that are going into residential markets and buying up entire neighborhoods. I'm sure some of you guys have seen that, but I'll come back to that. So one of the things that we found in the market, and especially when prices start to get high and there's an upcoming correction or crash that's impending, one of the types of real estate assets that stays very strong is multifamily or affordable housing. So anything like 150, 200 unit apartment complexes, things like mobile home parks, anything that's affordable when times are tougher can be a great place whenever we have these corrections that occur in the markets. So we started looking into mobile home parks. And one of the things that Chris Root found was there's incredible returns in mobile home parks still right now, meaning when we evaluate commercial real estate, so anything over 4 units is considered commercial real estate. So if you look at a duplex is 2 units either side by side, or up in New York, apparently they have ones that are up and down, right? Downstairs and upstairs. Those are duplexes. That's still considered residential real estate. A triplex, residential real estate. A quadplex. You guys have quadplexes in Florida. They're very popular. It's where you have 4 boom, 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 and they're all under one roof, and each one of them has its own little courtyard patio. Typically, we have a lot of those types of things in Florida. I don't know if you guys do where you live, but quadplexes are very popular. That's still residential real estate. So whenever you're looking to get a loan for it, anytime you're looking at running the numbers on it, you look at those types of properties like you would with residential real estate deals, just like you would with a single family home. Those are all considered the same. But anytime you get into 5 units and above, we start considering it commercial real estate, meaning you're looking at for commercial loans. You're evaluating it like commercial property you would. So one of the things we look at is what's called a cap rate. Okay. So the cap rate is just the capitalization rate. It's basically how much returns you're getting on an annual basis. How much is the property worth versus how much money's coming in on an annual basis. And one of the things that Chris Root and one of the things that we found is mobile home parks were able to go get like 12, 13, 14% cap rates. And a lot of times we can even improve those, increase rents, to even get higher cap rates on some of these. So that's a very good cap rate when we're talking commercial property. In multifamily in the last 5, 6, 7, 8, 9 years, it's become more and more competitive. So we were getting, just an example, 6 years ago, we were getting a lot of, let's say 12% cap rate on multifamily. Well, today, if we find a multifamily deal that's 7 or 8% cap rate, it's pretty good right now. And the higher, the better. So it's just become a lot more competitive. And there's a number of reasons why that's happening and whatnot, but it's become competitive. And so what we found is mobile home parks, we were still getting very, very good cap rates. And Chris Root has gone out there now for 4.5 years, and he's perfected the process of identifying, of finding, of negotiating, purchasing, rehabbing, and what we call seasoning these investments, seasoning these mobile home parks. And what that means is basically getting them full of renters, so making sure they're full, all the rents are coming in, it's all maxed out. We've added whatever we can add to increase the income on that specific property. Okay. So Chris Root has become very good at that. And one of the strategies by doing that entire process, once it's seasoned, you can then take that property and you can sell it off to a larger investor. You can sell it off to another investor, to somebody else, and you can make great money doing that entire process. But it takes a couple things to do that. Number one, you have to have the skills to be able to do it, but 2 other things. It takes time. So it takes time to identify, to get the property fixed up and rehabbed in the way that it needs to be. It takes time to season it, meaning that it's done, it's full, and has income coming in for a certain amount of time, typically 12 to 24 months. is what you want to season these types of properties. And then once it's seasoned, it's kind of proven that it's a good investment at that time. And then a larger investor is willing to come in, or somebody with more money is willing to come in and buy it because they say, hey, that thing's golden. It's been performing well now for 2 years. I don't have to do any work. I can just buy this thing and it'll start producing income for me. Okay. So Chris Ruud, he needs the time to be able to do this, but more importantly, he needs the money. So he needs money to be able to scale, meaning to be able to do this on a mass level, okay? Because you can go out there and you can buy one of these. You might have $2 million in it. Then if you want to go do another one, you got to have another 2 million. Then if you want to do another one, you have to have another 2 million or whatever the cost is, right? But if you start doing, let's say 5, 6 of these at a time, all of a sudden you've got 10, $12 million wrapped up in it. You know, even for somebody that's very, very successful, and you'll see anybody in real estate in general, we always leverage everything in real estate. Okay. You always want to leverage. There's big difference in good debt versus bad debt, et cetera. So the way that you do that in real estate is you scale by creating, by starting to accept and raise private money. All right. So Chris Ruud and Chris Naugle got together and basically said, and I'm of course, I'm just kind of showing you the broad range of this. There's a lot more to it, but basically what happened is Chris Ruud and Chris Naugle got together and said, Chris Ruud said, all right, I got the skills, I got the time, and I know exactly what to do to make all this happen. I've done it now for 4.5 years. I have the track record and experience. All I need is the money to be able to scale this thing and do it at mass level where we can buy 10 of these parks instead of just one at a time. Chris Ruud, who's Chris Naugle, I mean. Chris Naugle, America's #1 money mentor, right? Chris Naugle is very, very good at money, moving money, getting money working, raising money, teaching people how to go out there and create more money to get out there and invest. So things like self-directed retirement accounts, taking back control of your money, money multiplier, privatized banking policies. Because once you have all this stuff, the one thing is you got to then know, once you have an IBC policy, once you have a self-directed IRA, what do you do with it? You then got to control it. You got to deploy that money. So this is a great option. So that's how Safari came into place. Ruud said, I got the skills and the experience and the time. Naugle said, I got the money and I got the skills on the money side of it to raise more money. So let's get this thing together. So Safari Fund was born with the sole purpose of funding these mobile home park projects. And again, I'm just giving you an example. If anybody wants more details on exactly how that works and exactly what that looks like, you're going to hop on the phone with the Safari fund manager. His name is Herein. I know a lot of people on this call right now have already talked to Herein. He's a great guy. So if anybody wants to chat with him more about that, just let me know. If you're in the Private Money Club, I'll definitely connect you so you can do that. But by investing your money into the Safari Fund, which then deploys the money to Chris Ruud and these mobile home parks that he's buying, you then would get paid a 7 to 12% return on your investment just by basically funding this deal. No other work required on your part. So if you were to invest $100,000 into the Safari Fund, you would earn for, let's say, 3 years. What would happen is you would earn 12% annual returns on your money, meaning you would now get $12,000 a year coming in to you just by giving them your money that one time up front. So what I do is I sign the contract, I fill out the direction to invest form if it's coming from a self-directed IRA or if it's coming from an IBC policy, I'll create how that's going to look. And then I'm going to wire the money over to the fund. And then I sit back and all I do is wait. And the way that happens is once I send the $100,000, I just each month, I wait for a check to come into my mailbox. That check comes in for $1,000. Again, 12% of 100 grand is $12,000. It's paid monthly. So you're going to receive $1,000 a month every month for the next 3 years without having to do anything else. And then once the 3 years is completed, that $100,000 will then be returned to you. And then you can go do whatever you want with it at that point. And you had made 36,000, right? 12,000 a year for 3 years. So that's how those types of private funds work, using Safari Fund as an example. Another investor that I know a lot of people on this call have spoken to, that's a big part of Private Money Club. His name is Jack Petrick, the Petrick Group. So Jack Petrick does very, very similar to what Chris Ruud does with mobile homes, but Jack Petrick does it with multifamily apartment complexes. So Jack Petrick is very, very good at finding 75, 150, 250 unit multifamily apartment complexes that need some work. So a lot of times, and one thing that I know, and I'll give you one little secret what Jack does when he looks for these. So one thing Jack will do is he will target apartment complexes that somebody or a company has owned for 20, 25, 30 plus years. And the reason he does that is one of the things that is a big advantage of owning real estate is depreciation. And when you own large scale real estate like multifamily, you can depreciate that asset over time. So what a lot of these guys do that buy these large apartment complexes is they'll depreciate that entire property over, like, let's say 20 to 25 years until there's no more depreciation that they can take from that property themselves without dumping a lot more money into it. So what Jack will do is he'll target investors or owners that have had these properties for a long time that are probably at the end of the road for what they're able to depreciate. And if you've owned a property for 30 years, you've collected rent, you've collected income for over 30 years on that property, a lot of the time what we find is those people are ready to sell. Like, they're done with it. They've been doing it for a long time. They've depreciated and taken everything they can out of it. And the properties, a lot of times, especially once they've had them for a long time, if they haven't kept up with them over the years, which happens all the time, we find this all the time with these types of properties, they haven't kept up with the maintenance. So, a lot of times they'll need like work, like they'll have like older carpet in them, and they'll have older appliances, and they'll have like the original light bulbs and ceiling fans and faucets on the sinks and the showers and the toilets and all that stuff. And that investor, again, if they've owned it for that many years, they've been doing what they've been doing. A lot of times they haven't kept up with it, and they don't want to. They're getting older. They're looking for retirement. So those are the people that are perfect to go in and do a seller finance type deal, or work out an arrangement with them where maybe they can still make some money off it, but you're taking over the control and the ownership of it. Because when it transfers ownership, you can start depreciating all over again, especially if you need to put money into it. These are what we call value add properties. So we specifically look for ones that need work. These are called value add, because what we can do is we can go in and we can buy 100-unit apartment complex as an example. Okay. And this is exactly, one of the strategies that Jack does. And if anybody wants to, I can definitely connect you. Jack loves teaching this stuff too. So he'll go through his whole process, what he looks for. I'm just giving you kind of an overview on this call. So what Jack will do, so going back to what we look for, so if we go in and let's say it's a 100-unit apartment complex, and the thing just, they haven't kept up with it in the last decade. Well, we can go, and that's perfect, because we can go in and we can update the lights and the light sockets. And what does that do? Well, we're gonna change out the old halogen to the new LED. Well, LED lights, they take up a lot less energy consumption. So immediately we're lowering our energy bill by doing that one strategy. Because if you have 100 units, you have thousands of light bulbs in that building. And when you have thousands of light bulbs, that starts to add up. We'll go in and we'll change out the faucets, the sink, the kitchen sink, the bathroom sinks. We'll swap out the toilets for the low flow. First off, the faucets, the low flow faucets, the shower heads, the low flow shower heads, the toilets, the very water preserving toilets. You guys know what I'm talking about, right? Where every time they flush, they don't take up as much water. So we're automatically lowering that water bill in the entire complex. So we're looking for things that we can do that are going to improve the property. Because if you go in and everything's new, it's got new toilets, it's got new sinks, it's got new light bulbs, it's nice and clean looking. And obviously we paint them. We'll take out the old carpeting and put in, that nice, I actually have some in my house, but that's the stuff that's, it looks like the tile. It depends on the place, but there's different types, all kinds of nice flooring these days. I mean, it's amazing what they've done with flooring in the last decade. So we'll go in and we'll make them all nice, but we'll also look for ways to save on the expenses. We'll go in and we'll take, hey, can we put in vending machines, or can we put in washer and dryers, or do coin operated washers and dryers, or what's that look like on this property? So anything that we can do to increase the income or the revenue and decrease the expenses, that's what we look for. Those are what we call value add. So by doing that and making them nicer, we're able to also raise the rents a lot of times. Now that's a tricky subject. You don't want to, people have been in there. You don't want to raise their rents, but a lot of times what we'll do is any turnover, the new people will raise the rents on. So that's a management thing. So that's comes with experience, the best way to approach and do that subject. But the point is we're increasing revenues, we're decreasing expenses, and then we're seasoning the property in the process, meaning we're filling it up. We're going from sometimes 70, 80% occupancy to 90, 95% occupancy, and we're getting it in there where it's consistent. So then in a year or in 2 years, when we need to refinance that property through a bank, that's how we're able to go in and get traditional financing, cash out the investors, and move on to the next one. So that exact same process, Jack will raise money, because if you got one apartment complex for 3 million, great. But how do you do 3 for 3 million? You need a lot more money. So we'll get investor money. He'll get investor money, and he'll combine all that together, and he'll use that to do this. Then once it refinances, he pays off the investor. And a lot of times with Jack, for example, this is a really neat thing that he'll do a lot of the time, and it depends on the deal, but talk to him about it. If you invest a larger amount of money with him, let's say over 6 figures, let's say over 100 grand, sometimes what he'll do is he'll actually give you some of the equity in that deal as well. So not only let's just use 100. I'm gonna use an example. I don't know if he's doing this right now. Just giving you an example of how a lot of these private funded deals will work. Okay. So these is all stuff you can talk to the investor about. So what'll happen is, okay, you have $100,000. Let's say it's for 2 years at 12%. So again, $1,000 a month coming into you. It's interest only. So $1,000 a month. At the end of the 2 years, your $100,000 is returned. But included with that deal, you also, like say, got 2% equity on it. So $100,000 goes in, you get paid $1,000 a month for 2 years. At the end of those 2 years, you get your $100,000 back, and then you're still in the deal because you now own 2% equity of that deal. So what that means is if they keep it and they don't sell it to a larger investor, well, what do you have coming in at that point? You have income coming in, right? You have revenue coming in. You have all the rents coming in. So whatever that profit is, if you had 2% equity, then you start making 2% every single month off those profits. Now, 2% might not sound like a lot of money, but if that deal's making $10,000 a month, you're not making a couple $100 a month on it, or whatever the case might be. So a couple $100 a month for doing nothing, where you've already made 24 grand, you already got your 100 grand back, and now you're just making free money. Who's going to say no to that? But then it gets better. Let's say that you make that couple $100 a month for a couple years, and then they decide, okay, hey, this property, because the market is now way up in value. We bought it for $3 million because of all the work we've done and because of the appreciating market. This property is now worth $5 million. So we're going to sell it and make a $2 million profit. Well, what's 2% of $2 million? I don't know. Do the math on that. But whatever that amount is, all of a sudden you now get a check because you have 2% equity in that. You now get a check for 2% of whatever that cash out sales price was later on. You now get an extra check. So you made money off the interest. You made your initial investment back. You made all that free money through rents and revenues. And then you made a nice chunk at the very end of it. So these private funded deals, they're very passive. Again, all you did was have the conversation with Jack and said, okay, I see what you're doing. It makes sense to me. I want to be part of that. Here's my money. You sat back and didn't do another thing ever again. And you made money 3 different times on that. So 2% of 2 million is $40,000. So you made an extra $40,000 on the back end for doing nothing more. And again, I don't know what the equities are. I don't know how much you'd have to invest. I don't know what the profits might be. This is completely just an example, but there can be money to be made there. Does everybody understand that? Does that make sense to everybody? And Lynette said that all the tenants hate you because they can't get enough water to rinse their hair. Yeah, I hear you. There's actually a lot of really good products these days, believe it or not, that are the low flow and don't that conserve water, but they're very good products. And again, that's just one little example. There's a million different things that we can do to create value and to deduct expenses. And it doesn't have to be done in every one, but it's very common these days for that kind of thing. How does taxes work on all of this? Josh, it's just going to depend on where the money's coming from primarily. I mean, if it's coming from a non-qualified, so a cash account or your private bank, it's going to be money coming back in, investment money income, or the interest is going to be, well, it depends if it goes through your LLC. It depends, I'm not an accountant, so work with your CPA on this, but there's ways to create deductions for some of this and things too. It depends if you have equity in the deal. So there's a little bit more comes into it. But if it's in an IRA, it's all going to be tax deferred. In a self-directed IRA, it'll all either be tax deferred or tax free income that goes back into that IRA. Yeah. So Angie said, would love to see an example of lending through our LLC to then lend to somebody like Jack. Yeah, absolutely. Here, I'll write these down. These are great videos that Chris and I can do for you guys, either on a Wealth Wednesday, or I can put together one for this Private Money Club Monday. So let's see, lending. So private lending through LLC to private fund. Okay. And then maybe I can do another tax one too. Maybe I could bring like Brent Carlson on. Would you guys like if I brought like Brent Carlson on with Corporate Capital to talk about private lending and taxes? All right, Brent Carlson. All right, just writing this stuff down. Okay, that would be great. Borrowing from a TSP 401k. Yes. K1 if outside of tax deferred. Yeah, Jade. See, that's what I just didn't want to get into like specifics right now on taxes, but yeah, you're absolutely right. So, okay, cool. So those are just a couple of the different types of private, passive funds that are in the Private Money Club. There's a couple other ones in there right now and ones that are coming on the table. Jack has other opportunities available. Chris, I think Safari, I believe, is the 8th or 9th private fund that Chris Naugle's done. So these types of funds happen all the time. Sometimes they'll be commercial, sometimes they'll be multifamily, sometimes they'll be shopping plazas, malls. I mean, it just depends on what's going on or what that fund is, the money's being raised for. So, all right. The other thing that I wanted to talk about, so that's one type of passive fund that's in there. Again, those are going to be the least amount of work. So a lot of times, like with Safari Fund, it's going to be 7, 9, or 12% return. There's no negotiation. Like you're not going to go to Safari Fund to Hershin and say, listen, I'll lend you my money, but I want 14%. It's just not going to happen because it's SEC registered. It's in the PPM. It's all right there. So it's kind of is what it is. But again, you're just lending and doing nothing else. When you start getting into like single flips, like single opportunities. So like when Lori and John Halter have a flip that they need to raise money for, and you as the lender have to look through their perfect loan proposal, look at their deal template, analyze the numbers, decide what their experience is. Like there's a lot more involved on the lender side. Like you guys have to create the contract and negotiate the terms. And that's the one that's going to be like, okay, well, John and Lori might want to pay 8%. And they're like, listen, we are willing to borrow your money, but we only want to pay 8%. But then I'm over here and I'm like, listen, I want to get at least 12% for my money. And here's why, you're not as experienced, or this deal carries a little bit more risk because the numbers aren't that good, or, the market that it's in, we don't think that market's going to be that hot. So we're going to have to hold this longer than expected, which is more risk for me as the lender. So I want more on it. So that's where the negotiation comes in. So one of the things, and this is a good time to bring this up. So when you're evaluating these single family flips, the other thing that I want to make sure that you understand, because there's a lot of lenders on here, as a lender, just because you don't have the amount of money needed to fund that entire deal doesn't mean that you can't be involved with it. Okay. One of the things that we are doing for the Private Money Club right now is we are offering what's called a concierge service. And if anybody's interested in this, let us know. We've kind of already done this as like a test for a few people, but we're going to start doing it more on a regular basis. Is we have a concierge service. So there's a guy on our team named Alan that's going to be heading up this concierge service. But what that's going to do is, let's say that Jade has a single family deal that she needs money to be funded for a flip. Okay. Well, Jade's going to put together the perfect loan proposal, the deal template, the comps, everything in there that you need to know to make an educated decision on whether to lend on that deal. But let's say that Jade is like, okay, well, I need $200,000 to do this flip. And then Sonia is like, okay, well, this deal looks awesome. Like, I really want to lend on this deal, but I only have $50,000. And then Candace is like, all right, I really want to lend on this deal. Jade has the experience. The deal looks awesome, but I only have $50,000. She needs 200. But then Josh gets on and he's like, man, I love this deal too. I want in. I got $100,000, but I don't have 200,000. So what do we do? Well, this is where the concierge is going to come in, because you're going to be able to tell your concierge, hey, I really like the deal that Jade has, and I have $50,000 that I can put towards it. And then Sonia, same thing, goes to Alan. Hey, I got 50,000. I want to put towards this. And then what Alan's going to do is Alan's going to say, okay, I got Jade, I got Sonia, and I got Josh. That's $200,000 combined. Jade's got this deal right here for $200,000. Let me put all three of these people's money together onto one mortgage, onto one contract, so we can fund Jade's deal and get this thing done. So basically, all three of you will still have the first lien position. All three of you are going to be on the same mortgage. It's just going to be proportional ownership. So, in that case, 25% of the profit would go back to Jade. 25% of the profit would go back to Sonia, and 50% of the profit would go back to Josh, since it was 100,000, 50, and 50 for the total of 200,000, just as an example. So that would all be done on the mortgage, on the contract. I swear one day my lawn guys, I'm going to have to tell them they got to come at a different time. All right. Sorry about that. So anyway, so the concierge service is going to be very helpful for that, because, we understand that, or maybe you have more money out there, like you just lent 150, but you only got 50 left over and you don't want that money sitting. So you even want smaller amounts, 20,000, 30,000. You want to get those to work for you. So, Jack Petrick's really good at this, actually. Jack will say, I'll work with anybody, even if they got 20 grand, because if I know if I can put their 20 grand to work and then they have more money later on, who are they going to come to first? They're going to come back to him, to Jack, to lend to again. So, those kinds of situations are great. But if you want to take advantage of these single family flips and get involved in some of these quicker turns, because a lot of these quick flips that people are borrowing money on are, 3 months, 4 months tops. Some of them maybe up to 6 months, but most of these are quick flips. So they're getting it done quick. Safari Fund is great. It's 12% returns, but it locks up your money for 3 years. A lot of people that I talk to, they want to invest their money shorter term. They're like, listen, I want it to be available to me in like 7, 8 months, because I got an opportunity that's going to come up in 2022. 2022, there's an opportunity, but it's only June 2021 right now. I don't want my money sitting for that long. So where can I go get that money to work right now? Still make 10, 12 plus returns. You can put points on there and everything. How do I get that money working for me now? But I get that money back by the end of the year, so it's ready to deploy into what I need it for in 2022. So these quick flips are very, very good for that. So depending on, how long you're looking, because some people, especially if it's in an IRA, the longer the better, because they want to put that money somewhere and forget about it. They just want to know that it's out there working and earning for them. They don't want to think about it ever again. They just want to know that they're making money on it. But other people, again, all situations are different. So we need to evaluate what's your strategy, what's your situation, what are you looking to accomplish, what are your goals, and then what's the best deal for you right now to be involved in. So your concierge, I can help with this right now as well, but your concierge is going to be very, very involved for that type of thing also. So that's, part of being in the private money club. And then those of you that are looking to build the rental portfolios, like I mentioned at the beginning of the call, those of you that put R on the comments box, we have it. And this is what somebody said that Duck V is doing right now. Absolutely. We're working with a couple very strong companies. One is called Rent to Retirement. The other is called Philanthro Investors, Equity and Help. And what they do is they basically will help you. Well, what they do is they actually identify rental properties, residential single family rental properties that are good investments. So they have good returns. So you could buy it for 200 grand and make, 2,000 a month coming in. But they'll help you with every step of the way. So they'll identify identify the property. They'll run all the numbers, come up with all the comps. They'll find a buyer. So they'll find a renter that wants to buy. Excuse me, not a buyer. They'll find a renter that wants to rent the property. They'll find a property management company that's going to manage the property. They'll help you get financing for rental properties so you can leverage your money. And then they'll get the whole entire deal done, closed, funded, and everything done for you. So basically all you have to do is the paperwork, agree to, these are the houses that I want. And they'll basically do everything else for you, including having that property manager in there. And the nice thing about that versus private money lending is then you own the real estate. So back to like the multifamily I was talking about earlier, you take advantage of things like depreciation. You're taking advantage of leverage, because if you can buy $1 million worth of rental properties, but use $200,000 of your cash through leverage, 20% down, 200,000 on $1 million worth of real estate. Why not do that? So leverage is where you can really create some solid incomes and returns for yourself. Plus you're taking advantage of appreciation. So over time, real estate does what? It increases, and you're taking advantage on your taxes of depreciation. One of the big reasons why so many wealthy people own real estate is because of taxes, because of depreciation and what they're able to do with that. So the Duck Fee special, I don't know, but I know he is working with philanthro investors in equity and help. And again, I've already worked with their CEO, their CFO, and their team, and we're just putting together the final touches. But if anybody wants to get in contact with them, just let me know and I'll make an introduction for you for right now. And Rebecca, all of those that I'm talking about, right? Everything that I'm talking about right now is in the Private Money Club. So any of you that are Private Money Club members, you have access to all of this stuff that I'm talking about. If you're not in the Private Money Club yet, let's make sure you're qualified to be in there and let's get you in. And again, we are doing our 2-hour group coaching call this Thursday as well. So I went a little longer. I wanted to get into some examples. I'll save that for next week. We'll go in and we'll start evaluating deals because I want to run numbers and make sure everybody understands, like, if I'm doing one of these single family flips, one of these quick flips, if I'm going to lend on that, like, let me make sure that I'm evaluating it properly. So I want to go through the numbers, like, how much are they buying it for? How much work is needed? What are the holding costs? How long is the deal going to take? Like, all the stuff that you should be looking at when you're deciding, do I want to lend my money to this borrower or not? This is all the stuff that you should be looking at. So let's do that next week. I'll put together a neat little couple examples and we'll run through some deals and you guys can ask questions and make sure that you fully understand it if you are looking at lending on some of these individual flips and some of these one-off type deals. And again, somebody like Steve Lawson, who you'll see on here a lot, I've seen some people starting to work with him and he does them quick. So he'll get a deal done in 3 months, meaning you lend him the money and 3 months later, he's giving you the money back. But what he'll do is he'll say, okay, now I have 3 more deals ready to go. Do you want to lend, just take this money and lend on the next one. So you get your money back and immediately goes right to the next one. And he's very good at offering the existing investor the next deal first. So that's one of the reasons Steve hasn't had any on here lately is when I talked to him last, he had his existing investors that had funded these last few deals that we saw on here are just rolling their money into the next deals. But we'll get more and more on here as time goes. So with that being said, are there any other questions for this week of Money Club Mondays that I can answer? And while you're typing those in, just a reminder, we have the Wealth webinar, Wealth Wednesday webinar series. Chris and I are starting it this Wednesday. It's a 4-week series. And this week is going to be all about the rich versus poor mindset and how you can do one thing to make sure that you're never poor again. So this week's going to be a lot of fun. That's Wednesday at 1 p.m. Eastern. We do the Ask Me Anything at 4:30 Eastern every Wednesday. This Thursday evening at 6 to 8 p.m. Eastern, for everybody that's in the Private Money Club and MSTV, is our 2-hour group coaching where everybody's on there. We all talk together, and it's just an excellent 2-hour coaching. So make sure you hop on there this Thursday. And then we have a couple live events coming up in July is the Inner Circle, which is a deep dive with Chris into private lending and the BRRRR strategy. So buy, rehab, refinance, rent and repeat. So how to build a rental portfolio using the BRRRR strategy. Chris teaches that in person at the Inner Circle event. That's in July. I don't know if there's any openings for that actually. So if anybody's looking to attend that, just let me know and I'll see if they have 1 or 2 seats left. And then we have the experience coming up on at the end of August. And that is at Chris's home and at the event center. It's the first event Chris has ever done at his home up in Buffalo, New York. It's going to be a whole weekend. It's going to be more of an experience. So it's taking your business to the next level, but it's going to be more of a kind of like a friendly approach, I guess, so to say. It's not training. It's not like stage speaking or anything like that. It's limited to 25 seats. I think there's 17 left, if I'm correct, 16 or 17 seats left for that. So that'll be at the end of August, and I'll be up there in Buffalo, and our whole team will. It's gonna be a lot of fun. Okay, so that's all I have for Money Club Mondays. Let me see. I have one more question coming in. Which is better to invest private money for 12%, 48 months, or 15% for 6 months? Ricky, again, it just depends on what you're trying to accomplish, where the money's coming from, how active that investment's going to be. But a 15% return in 6 months, assuming it's apples to apples on everything else, is a great return. So there's just a lot that would go into that. So if you want to evaluate a deal or something, just let me know, Ricky. We can definitely hop on and talk about that and what the best strategy would be. So thanks so much for being here, guys. Look forward to next Monday. We'll see you then. We'll see you this week on the other events. And if you need anything, Snaggy, snaggy at chrisnaugle.com. Shoot me an email and I'm here for you. Thanks a lot, guys. Have a great, great, great week and a great day.